Hey guys, I'm gonna do a little bit of an introduction to chapter 9.1. Everything comes from the Century 21 accounting book written by Cengage. Then I'll go over the work together problem 9.1 with you. So there's a lot of vocab words in this chapter. We are moving out of the typical service business that we were discussing before. Service business is someone who provides a service for a fee. You cut someone's lawn, you're a service business. You provide a service and you collect money from it, for it. Then we have, you could probably sit and think about many different service businesses in our area. You could think restaurants, lawn mowing, shoveling, car washes, what else? Provides a service for a fee. I don't know, brainstorm, think about it. Then we have merchandising business. This is what we're going to focus on for this chapter. Actually, moving forward, we're moving out of the sole proprietorship, moving into merchandising businesses for corporations. I'm going to go over some key vocabulary words. We have merchandise, which are goods that a business purchases to sell merchandise. So if someone like American Eagle wants to sell you t-shirts, merchandise. They purchase t-shirts from somebody else and sell them to you. Okay, just zooming in there. Next one is a business that purchases and resell goods. It's called a merchandising business. So the goods, the t-shirts are the merchandise. American Eagle is a merchandising business. A merchandising business that sells to those who use or consume the goods are called a retail merchandising business. Beautiful. When you think of the word retail store, what do you think of? That brick and mortar store at the mall, like American Eagle. Okay? A wholesale merchandising business buys and resells merchandise primarily to other merchandising businesses. So a wholesale merchandising store, I'm going to try to think of one off the top of my head. I don't know. It could be something like maybe a company that buys and resells t-shirts. So maybe American Eagle actually buys their t-shirts from a wholesale merchandising business. So they call up this warehouse and say, hey, we need 500 shirts. They buy from a wholesaler, then they resell to you, the buyer. So they're the retail merchandiser. Okay, so that's what the merchandising business is. Then we have forming a corporation. So corporations are an organization with legal rights, just like a person has, with which many persons or other corporations may own. So, corporation could be Nike, for example. And so it says, for an example, a corporation can own property, incur liabilities, and enter into contracts in its own name. Nike, corporation, they could buy buildings, and we say Nike owns that building. Around here, or somewhere local, for more of a service business, let's think about, there's a business in Schuylkill Haven, and it's TB Landscaping. Terry Bensinger owns that landscaping service business. We look at that, we say, TB owns that. Terry Bensinger owns that. We look at Nike, sometimes we can pinpoint, like, whoever the CEO is, but usually we say, hey, Nike owns that business. So they own things just like a person could, but the business owns it. So the assets or financial resources available to a business are called their capital. So any of their assets, property, houses, buildings, warehouses, that's their capital. And any other financial resources, cash equivalents, those are things kind of like cash that you'll learn about later, so we won't get into that. So one way that a corporation can obtain capital in order for it to grow is by selling ownership of its company. That's what we do on the stock market. So we see each unit of ownership in a corporation is called a share of stock. We can go online right now. We can look up how much it is to own a piece of Nike. That's what it is. You're owning a piece of their company. You're giving them money. That money goes to them. Let's say Nike shares are $20 a share. You buy essentially one of their shares. You could buy 500 of their shares. You could buy 10 of their shares. It doesn't matter. But every one share is $20. So I want to write this out. Give me a sec to grab my notebook. So essentially, one share equals $20. This is just, so let's say you buy 20 shares. You have to do 20 times 20. And that's how much you own in Nike. So then the owner of one or more shares of stock is called a stockholder. So then you end up holding that stock. You're called a stockholder. The total shares of ownership in a corporation are called capital stock. Another way corporations could raise their capital is just by borrowing money. So this is just fun knowledge in ways that corporations kind of function and what they do. So this kind of talks about how a corporation has to apply to the government. They need to develop articles of incorporation, which is a legal document that identifies basic characteristics of a corporation. So they apply for this, and then the state can approve the formation of a corporation by issuing a charter. So that's the legal rights for a business to conduct operations as a corporation. Much more difficult than just opening your own business that we talked about in chapter 1. So for corporations and merchandising business, they're going to have a lot more accounts because they're like Nike compared to Mr. Joe, who owns a laundromat down the street for Schuylkill County. Nike's going to have so many more vendors than Mr. Joe is. Mr. Joe just gets the kids or the families that come in to wash their clothes. Nike, massive company worldwide. Their business books are going to look a lot different. Not too far different, but they need more than what the average person does. The small business, I should say, in accounting. So here it says the main difference between accounting records of proprietorships, which is that single person owning the company that we talked about in chapters 1 through 8, and a corporation is the capital accounts. Proprietorships have that single capital account, single drawing account. We talked about, Mark Smith withdraws money and puts money in. That's about it. Corporation, massive. They have these stock issues. They have other sense of earnings that are kept in their business, and they have a ton of vendors. All this stuff we'll continue to talk about through this chapter, but it's good to know this information at the start. I think I'm going to make a second video for subsidiary ledgers, but that's just an introduction to the merchandising business and forming a corporation. So I won't reach the work together problem in this video, but the next video I will.